Stock markets bounced back, recovering from their steepest weekly loss of 2024. The Kenyan government seeks public input on a finance bill that triggered nationwide protests. And we explore the significant impact women have on Pakistan's economy. Hello, I'm Taiba Aydin here with the latest business and finance news for you here on TRT World. The stock market rebounded this week after facing its worst performance in 2024, driven by optimism around inflation reports and potential interest rate cuts. As financial sectors rallied, attention is now turning to upcoming inflation data, while Asia-Pacific markets received a boost from stronger than expected export growth in China. In the US, the S&P 500 surged by 1.16%, recovering from its worst weekly performance since March 2023. The Dow Jones jumped over 450 points, or 1.2%, while the Nasdaq gained more than 1%. Financial, industrial and energy stocks led the market rebound. With inflation in focus, investors are watching this week's consumer and producer price reports. These will offer clues ahead of the Federal Reserve's policy decision next week, with potential interest rate cuts between 25 and 50 basis points. Meanwhile, Asia-Pacific markets responded positively, with Hong Kong's Seng index rising 0.3% and Japan's Nikkei 225 climbing 0.1%. Australia's S&P ASX 200 also added 0.6%. Shares of tech giant Alibaba rose over 4% in Hong Kong. South Korea's Kospi index gained 0.04%, while the small-cap Kosdaq slipped by 0.4%. Mainland China's CSI 300 edged down by around the same. Let's get more on this now with Tim Waterer. He's Chief Market Analyst at KCM Trade. Hi there, Tim. Now, equity markets have bounced back from one of the worst weeks of the year. What's contributed to this rebound?
Good to be with you again. Yeah, that's right. Not the first time we've seen a U-turn by financial markets recently. Of course, we saw a similar thing happen last month. And again, that was in reaction to the non-farm payrolls numbers. So I think what we saw on Friday, and to start the week in Asia, we saw an overreaction to the downside. And in the last 24 hours, we've seen a recalibration that it wasn't that bad a report. Yes, it missed, but it didn't sort of hint at an impending recession in the US. So I think traders are starting to look a bit more on the glass half full side of things, that a rate cut looks to be on the way from the Fed. And that's why we have seen that rebound across Asian markets today.
Right, and how will these upcoming inflation data shape the Federal Reserve's interest rate decision later this month?
Yeah, that's right. Last week was all about jobs. This week, the attention turns to CPI. So the expectations are that number could come in around that 2.6% on an annual basis. Now, the Fed's target is 2%. So it's moving, closer and closer to where they want to get it to. I think in terms of how the result could impact policy, if we do see a number around that 2.6%, I think that keeps the Fed on track to cut by 25 basis points later this month. Now, if we did see a particularly weak number, then I think that would sort of elevate the chances for the Fed to wield the axe more, so to speak, and deliver a 50 basis point cut. I still think that's very much an outside chance because, one, it could signal panic to the markets, and two, it could be the Fed admitting that they were behind the curve in starting to cut interest rates. So, yeah, we're looking for around that 2.5% to basically concrete a 25 basis point cut next week.
Right, with Apple's new iPhone 16 unveiling on Monday, how significant is the tech sector's role in stabilizing market confidence recently?
Yeah, the tech sector got a big role to play. I mean, in terms of Apple, it's good to see they are releasing new products. Didn't exactly wow the market. If we look at the Apple share price, it's had a muted reaction so far. But bigger picture, I mean, I think if we can extend, the reach to other manufacturers, Huawei, for example, there seems to be quite a bit of enthusiasm there for their new products. So, yeah, I think the AI enthusiasm is still there, but with some caveats. Of course, we are heading up to a US election, and there will be questions over how the export and tariff picture will look, from 2025 onwards. So I think there are questions for the tech sector moving ahead, and we could be in for a bit of a bumpy road in the next few months. But yeah, I think it's still certainly a key sector to drive markets forward. I think if we did see weakness in the the big tech names, that could have a big negative impact on the broader market. So yeah, very important to answer the question.
Now, over in China, we've had some trade data come out. Exports have exceeded expectations. How could this impact global market trends, especially in the Asia-Pacific region?
Yeah, some pleasing numbers today from China on the export front. That's still doing the heavy lifting for the Chinese economy at the moment, because the numbers also showed that imports remain weak, hinting at that, that very much subdued demand picture facing China at the moment. So they are very much relying on export-led growth. I mean, the numbers look pretty healthy in terms of demand coming from the likes of the US and Europe, and particularly in terms of the Chinese, car sector. The EV demand is looking pretty strong, so that bodes well looking ahead. So I think, but there is still question marks once again on that demand front. That stems back to the weaker housing prices. We saw the weak CPI numbers from China earlier this week, so it's certainly not all rosy there at the moment. But I think for the time being, China is very much relying on that export-led growth to try and basically steady the ship until they can increase the domestic demand, and then we may see an uptick, heading into next year at some point, which would certainly, translate into, a better growth outlook for other Asian economies as well. So finally balanced in China at the moment, but yeah, thankfully the exports are, coming to the fore and, stabilising things while that demand sector remains weak.
All right, Tim Water, Chief Market Analyst at KCM Trade. Thank you very much as always.
Thank you.
Now a quick look at some of the other top business stories from around the world. Apple has unveiled its new iPhone 16 with latest features and updates, including advanced artificial intelligence to enhance user experience. Apple also announced major improvements to Siri, with new software starting testing next month. It's part of Apple's strategy to encourage customers with older devices to upgrade. China's exports surged more than expected in August, rising 8.7%. It marks its fifth consecutive month of growth and comes despite rising trade tensions with the West. Shipments to major partners like the US, EU and ASEAN are all up. However, imports lagged behind expectations, rising just 0.5%. Analysts at global investment banking firm Goldman Sachs are anticipating positive growth in big tech stocks. They say that as the US Fed is likely to cut rates, increased innovation in the sector may spark earnings growth in excess of 20%. They say that this growth is driven by AI advancements in areas in upselling customers and monetization. And Australia's consumer confidence fell in September, with many concerned about job security as the economy slows. The Westpac Melbourne Institute Consumer Sentiment Index slipped 0.5% to 84.6. Consumers feel anxious about the future and what this could mean for jobs, as well as rising inflation and possible interest rate hikes. Australia's second quarter GDP growth rose 0.2%. That was well below expectations. Plenty more here to come on TRT World, including the role women play in Pakistan's economy after this short break.
Want to understand our world, the news is important, but to really get it, you've got to get personal. Here on The Nexus, we look behind the big events, the big headlines, with the people who are in the story. What drives them? What makes them tick? Sometimes serious, sometimes fun. Always human and never compromising on the facts. Analysis that will get you thinking. Nexus on TRT World.
In the busy streets of Karachi, a silent revolution is taking place. Women, once confined to their homes, are now riding through the economic storm, stepping into the workforce to support their families. Their presence in the bustling business hub is a sign of changing times. Malik Fuda reports.
Amina Sohail weaves through Karachi's traffic on her motorbike, catching glances from pedestrians and drivers alike. For her, it's more than just a job. It's a statement. She's the first woman in her family to work, and she's proud of it.
My vision has changed. My thoughts are unlimited. I'm confident, and I will work openly like any man, no matter what anyone thinks.
In Pakistan, inflation has risen sharply. More women are finding themselves outside of the homes, working to support the family. The cost of basic items like tomatoes has jumped by 100%. While electricity and gas bills have skyrocketed by 300% in just 1 year. These challenges have forced families to seek new sources of income.
It's because of my accident that my wife had to get a job. But this is nothing to be sad about. I stand with her. We are companions, and we are running the house together.
In Pakistan, many women need their family's permission to work. The UN reported just 21% of women in Pakistan are part of the workforce. And many of them work informally, especially in rural areas. But the large port city of Karachi, home to millions, is leading the charge for social change, and its bustling streets are reflecting the shift.
The atmosphere in the house was stressful due to the economic crisis. My parents were stressed and couldn't manage the house. That's when I thought I must work.
As more women take up jobs, they're proven they're just as capable as men. They're contributing to their families and the country's economy. And while social norms and safety concerns still pose challenges, these women are riding through those barriers. Malik Fuda, TRT World.
For more on this, let's go to Lahore and speak to Osama Rizvi. He's an energy and economic analyst at Primary Vision. Good to have you back on the programme, Osama. Now, we've just heard from our report that more and more women are breaking tradition and joining the workforce. What's the contribution of women to Pakistan's economy?
Well, thank you for having me. First of all, we have seen a very positive trend in women joining the workforce, but I still believe there are many challenges that remain and the potential is still untapped. For instance, the female labor participation rate still stands at 22 to 25%, which is less than the global average of 52%. And according to a study, if this rate can be increased to 60%, the total economic size can increase to by $274 billion, which is a huge number. Finally, another important issue that needs to be addressed for a proper inclusion of women in the workforce is the financial inclusion, which is one of the cornerstones of a modern economy. In terms of Pakistan, the female inclusion, the financial inclusion, stands at 13% versus 36% in terms of men. So until and unless these challenges are not addressed, this positive wave may face challenges moving forward. But I believe, given the economic imperative, we will find some way, specifically the women. They're quite resilient.
Right. And what sectors are we seeing the most contribution?
So a sector that has recently come to the fore is the freelancing sector. You know, given the mobile penetration, the growing use of internet in Pakistan, and post-COVID-19 economic imperative, we have seen a huge growth in Pakistan's freelancing exports. So much so that after Nigeria and Bangladesh, Pakistani freelancers are at the top in the world. So freelancing is one. Services sector such as teaching still remains that. However, other sectors, unconventional sectors such as the civil services of Pakistan, the bureaucracy, the positions which are actually the leaders of the future, they have seen a very positive, encouraging number of women joining. So much so they're also joining the police forces, which is very encouraging and also beneficial for the gender policing side of the policy.
All right, Osama Rizvi, we'll have to leave it there. Thank you very much for joining us. Kenya's Finance Minister John Mbadi has announced the government will seek public input on new legislation to address the country's financial challenges. This comes after President William Ruto abandoned tax hikes worth over $2.7 billion following protests that resulted in over 50 deaths. The withdrawal of the tax hikes has worsened Kenya's budget deficit, pending bills and delaying IMF funding. Mbadi, who was appointed from the opposition to stabilise the government, initially suggested reinstating some of the taxes, but backed down after public opposition. Now he is calling for public proposals to help reform the country's economic situation, with submissions open until September 20th. Let's get more on this now with Churchill Ogutu in Nairobi. He's an economist at IC Group. Good to have you on the programme, Churchill. Now, with the hearing starting today, how does inviting public suggestions for financial reforms shape the government's approach to tackling Kenya's economic crisis?
Thanks for having me. What I can say from the onset is that public participation is part and parcel of the budget making process in Kenya. But what is usually the difference is that public participation is seen as a formality, or pretty much a rubber stamping of what the parliamentarians want to have in place, and also what has been passed by the National Treasury. So that has been the main difference, and that is at the heart of the determination that we'll start hearing today at the Supreme Court, basically weighing itself on the public participation. Is it actually a formality, or is there a public participation that the input from the public is incorporated in the eventual tax laws or the expenditure estimates? So that is what we are keeping an eye on from the hearing that will start today and also up until tomorrow. But on the long term, based on the Gen Z revolts that played out in June, July, I expect that going forward we'll see more of collaborative, consultative process within this whole participatory engagement with the public, in the sense that before we actually see, say, the finance bill being tabled in Parliament, it has already been thrashed out in the public from in a more consultative forum. So that is my view going forward, and basically that is even what the CS Treasury is sort of inviting the public to be able to give their comments before any proposal comes on the table.
Right, and can you tell us more about the economic challenges Kenya is currently facing that has prompted this call?
Obviously, I can think of three at the moment. One of them is the cost of living crisis, in the sense that in as much as inflation has, official inflation is at 4.4%. But if you look at the key commodity items such as bread, such as cooking fat, such as some of the basic commodities, their prices have gone to the order of 40% in the last 2 or 3 years. So that has weighed on the disposable income of people. The second one is on employment or lack of employment for the youths in particular. And this is coming back on the heel of a regime. The current administration, its campaign was at least to be able to uplift the people in the lower echelons of the society, but that hasn't been the case. The final last nail on the proverbial coffin is basically the fiscal indiscipline that we are seeing. So if you look at the budget, or you can think about that there's expenditure spending that the government needs to do, but what we have seen play out is basically rampant corruption. We have seen fiscal wastage, we've seen largesse by the political elite. So those are some of the things that have strained even the fiscal and has led to a runaway economic challenges that we're seeing in Kenya. So those needs to be addressed even in the context of the budget making process, so that we can now be able to ensure that there's some more fiscal discipline going forward.
All right, Churchill Ogutu, we'll have to leave it there. Thank you very much for joining us.
Thank you.
Elsewhere in East Africa, a non-profit organization in Ethiopia called Africa to Silicon Valley, or A2SV, is trying to transform the lives of young African software engineers by bridging the information gap between African countries and Silicon Valley. Henok Tesfaye has more.
Emre Baron was born and raised in Turkey, and he spent 8 years at tech giants like Google and Palantir before a 6-month visit to Ethiopia changed his life. It was here that he witnessed the untapped potential of African students, leading him to establish the African to Silicon Valley, or A2SV Academy.
So I was a firm believer of talent is everywhere, but the opportunity is not. And since there are talented people all over the world, I wanted to make a point. If we connect high potential students, even in Africa, with high quality education and opportunities, they will thrive. They are going to do great things like their peers do in other parts of the world.
Since its launch in 2019, A2SV has grown from training just 22 students in software engineering to reaching over 800 people in dozens of African countries, including Ethiopia and Ghana. 60 students have secured positions at companies like Google, Amazon, and LinkedIn. And students like Mali Daraja have also benefited.
During my internship for Google, I was a site reliability engineer intern. During there, I worked on a real-world project there. The experience was amazing. I was able to collaborate and work with top tech software engineers there.
Jordanus Asmara is a software engineer with over a decade of experience in Silicon Valley. She says such homegrown solutions are crucial and need African government support.
And there is gaining the skills and developing them versus just taking everything from outside and thinking it's going to solve what we see here. So there's a difference where we can develop the skills and build what's needed in our own context. And African governments have a lot of data and a lot of information and understanding of what's needed.
Additionally, the development of infrastructure and reliable electricity, particularly in rural areas, is essential to support a thriving digital economy. The Africa to Silicon Valley founder says he hopes that the software engineers his academy trains will stay in the continent and develop creative solutions to local issues. However, to such initiatives to flourish, African leaders and relevant stakeholders must step up their funding and prioritize their support. Henok Tesfaye, TRT World, Addis Ababa.
Spain is surging ahead in renewable energy with nearly 60% of its electricity sourced from green power in the first half of 2024. Wind farms led the charge with 24.4%, followed by solar plants at 16.3% and hydropower at 15.9%. This significant increase from 51% just a year ago underscores Spain's rapid transition towards sustainability. Coupled with nuclear energy contributing 18.6%, the nation has achieved a remarkable milestone with nearly 80% of its power now carbon-free. But not everybody agrees on the model. Xiaomi Oleras reports.
East, west, south. Whichever direction you gaze from the church in Hornillos de Cerrato in central Spain, you will invariably see a wind turbine. With over 40 wind turbines surrounding the town, this village of 170 residents generates enough energy to power 40,000 homes, significantly boosting its annual budget.
We've gone from a budget of €120,000 to nearly €520,000. And having that kind of money really allows you to do a lot of things.
Among the services subsidized for residents are 80% deducted from the cost of internet pricing, a municipal pool, and a 24/7 taxi service available to take elderly residents to the health center and hospital on demand. Elena has lived in the town for the past 6 years and benefits directly from these services. She is the taxi driver responsible for taking residents wherever they need to go.
The taxi service has been a success. Everyone who hears about it thinks so. Now, we're off to pick up Mari, who has a medical appointment and will be waiting for us at home.
Spain appears to have struck gold with its renewable energy project. With abundant wind and sunshine year-round, the country is striving to secure its place in this competitive industry. However, a debate has arisen in the country over how this energy should be produced.
At present, renewable electricity in Spain is not sufficient to meet the entire demand. However, there is a distinction between asking for that demand to be met with renewables and turning Spain into an energy production hub for export. We cannot produce 10% of our energy for export, as that represents a substantial amount with significant environmental and social implications.
Hornillos represent the vast, rural and sparsely populated areas of Spain, and Ignacio is clear about their future.
We hold on to anything that promises prosperity. Prosperity, of course, comes with income, and one of the opportunities available to us is wind energy.
The Castilian region hosts the largest number of wind farms in Spain, making it the leader in energy production across the country. Wind farms like this one are transforming Spain's landscape. Over the past 15 years, the country has doubled its wind turbines. Wind power has surpassed nuclear as its main energy source, making Spain the EU's second largest in renewable energy capacity. As Spain firms up its place in the renewable energy market, the country continues to grapple with finding a delicate balance between achieving its decarbonization goals and preserving its cultural and environmental landscape. Chao Melleros, TRT World, Hornillos de Cerrato.
Well, that's all your business news for now. Thanks for watching.